These 5 stocks are likely to lead the pack with further all-time highs this September. Many of these stocks have moved significantly since I last covered them, so you'll want to pay close attention. Plus, I've got a bonus stock for you that has climbed an impressive 70% so far this year. Let's get started. First up is MasterCard, ticker MA. This financial powerhouse has a market cap of $445 billion, making it the world's 20th most valuable company. Just to give you an idea of its reach, 35 million companies globally have contracts to accept MasterCard. Now, let's apply our 4-phase sequence method, or the 4PS method for short, to MasterCard. In phase 1, from October 2016 to April 2021, we saw a massive 293% increase. That's a solid historical performance that we like to see in a good stock. Phase 2 was from April 2021 to July 2023, a period of consolidation that tested most investors. August 2023 marked our phase 3 breakout, and since then we've seen a 20% climb in phase 4. This stock has climbed 6% since we last covered it. This is why it is so important that you catch our videos when they are released, as the market does not wait for anyone. Hit that subscribe button and turn on notifications. You don't want to miss out on any of these stock updates. So, when should you consider buying MasterCard? Looking at the daily chart, since the all-time high in March, MasterCard has been trading inside a phase 2 consolidation. Given the length of this consolidation, patience is key. We're waiting for a breakout and record highs before taking a position. Keep an eye on that $500 mark. Breaking through could signal the next leg up towards $1,000 per share long term. Remember, in investing, sometimes the hardest thing to do is wait, but often it's the most rewarding. Now, before we move on to our next stock, let me quickly review our 4PS method, particularly for those who might be new to our channel. We developed this method to significantly enhance our stock picking and timing for entering and exiting stocks. Phase 1 is about identifying a stock with a proven performance history. We look for stocks that have shown strong growth over time, because a stock with a good performance history will likely perform strong in the future. Phase 2 is waiting for a prolonged consolidation or a base to form. This is crucial because a breakout from consolidation usually presents opportunities to profit from strong trends that emerge with these breakouts. Phase 3 is confirming the breakout from that base. We want to see clear evidence that the stock is breaking out of its consolidation pattern. And finally, phase 4 is when we enter the stock at the start of the next major uptrend. This positions us to profit near the start of the trend and capitalize on the big moves, maximizing our profit potential. Now, at the start I mentioned that I have a bonus stock for you. Well, to illustrate how good the 4PS method is at identifying the start of the next uptrend, let's look at a stock that gets absolutely no media attention and that you've likely been sleeping on. The stock is GoDaddy, ticker GDDY. In phase 1, GoDaddy climbed 139% between 2016 and 2018. Then it remained in phase 2 for 5 years until October 2023. Phase 3, the breakout occurred in November 2023. And since then, in phase 4, GoDaddy has climbed 70% from $93 to $159 in just 10 months. I told you it's a stock you've been sleeping on. This example should give you a sense of the benefit of the 4PS method and how it helps us catch the start of the next major uptrend on top performing stocks. Note also that phase 4 is when a stock is typically printing new all-time highs. This is a key point because stocks that are trending and printing new all-time highs move the quickest over 12 to 18 months, as there is very little in the form of resistance above price to force the stock price down. In short, buy high, sell higher is often more profitable than buy low, sell high. Keep that in mind as we look at the next stock, which is Progressive, ticker PGR. With a market cap of $140 billion, it's the 103rd most valuable company globally. Founded in 1937, Progressive has a long history in the insurance industry, and as of late 2022, it became the largest motor insurance carrier in the US, an impressive achievement in a very competitive field. Looking at Progressive through our 4PS lens, we see a phase 1 from December 2016 to April 2023 with a 204% increase. That's a solid long-term uptrend that instills confidence in PGR being a good investment. Phase 2 was from April 2023 to September 2023, a relatively short consolidation period. Phase 3 occurred in October 2023, and since then PGR has climbed 68%, which is Phase 4. That's the kind of momentum we like to see when stocks make it into our portfolio. PGR has climbed 8% since we last covered it. Again, this underscores the importance of staying updated with our analysis. So, when to buy Progressive? This stock broke out of a 3-month consolidation in August and is setting record highs. We've held positions in this stock since last year and are now looking to add further positions on the next setup. We're waiting for a pullback and then the next breakout, with a view to this stock moving towards $500 at $100 increments. This strategy of adding to winning positions, also known as compounding, is a powerful way to maximize gains while minimizing risk. Now, let's talk about a true heavyweight in the investment world. Warren Buffett's Berkshire Hathaway, ticker BRK. With a market cap of $1 trillion, Berkshire Hathaway becomes the first non-tech company to join the exclusive list of companies that have reached the $1 trillion market cap milestone. This is an impressive achievement that many may not find surprising as it's Warren Buffett, but still, it is certainly one to admire. Berkshire Hathaway is a holding company whose conglomerate includes over 80 companies spanning a wide range of business areas, from insurance and reinsurance to rail freight, energy supply, and more. Applying our 4PS method to Berkshire Hathaway, we see a Phase 1 from March 2020 to March 2022 with a 127% increase. That's a solid performance as one would expect from an established company. Phase 2 was from March 2022 to December 2023, a period of consolidation where patience was needed. January 2024 marked the Phase 3 breakout. And since the start of the year, we've seen a 28% climb in Phase 4. This stock has climbed 8% since we last covered it. It's clear that Berkshire Hathaway continues to deliver value to its shareholders. So when should you consider buying Berkshire Hathaway? Well, it's recovered 18% from the August declines and is setting new all-time highs. That's when we started buying more shares. It's now closing in on $500 per share, which is an important level that could either push the stock price down or create another Phase 2 base, at least for the short term. If you're not in this yet, keep an eye out for a dip back towards the previous all-time high. That could be a good buying opportunity, or if it breaks above $500 convincingly, that could be another chance to get in. Next on our list is T-Mobile, ticker TMUS. As of 2024, T-Mobile US is the world's largest telecommunications company by market capitalization, with a market cap of $234 billion. It's the world's 50th most valuable company. Applying the 4PS method, Phase 1 is from 2018's low to 2021's high, a 177% increase. Phase 2 lasted 2.5 years before we saw a Phase 3 breakout in December 2023. The current Phase 4 uptrend has since climbed 30%. This stock has climbed 16% since we last covered it. That's a significant move in a short time. Again, highlighting the importance of staying on top of these analyses. The momentum will likely take the stock towards $300, the next major round number above the current stock price. If it breaks above that level, it will provide more buying opportunities. Keep a close eye on T-Mobile as it continues its upward trajectory. Now, let's shift to the consumer staples sector and look at Walmart, ticker WMT. Walmart is placed number 1 in the Fortune Global 500 list of the top selling companies in the world. With a market cap of $620 billion, Walmart is the world's 14th most valuable company. Applying our 4PS method, we see a Phase 1 from May 2018 to December 2020. Phase 2 was a long consolidation from December 2020 to January 2024. We saw a Phase 3 breakout in January 2024. And since then, we've seen a 36% climb in Phase 4. It's worth noting that Walmart has climbed 155% since 2017, when it first broke out from a 17-year sideways market. However, the climb up has not been smooth, with deep pullbacks and long periods of consolidation. But the trend in play since the start of the year is very different. It's a much smoother trend that will make investors much happier as it's covering ground quicker. Walmart is likely to target $100 through the rest of 2024. Last but certainly not least, let's talk about Netflix, ticker NFLX. Netflix currently has a market cap of $290 billion, making it the world's 33rd most valuable company. In terms of stock performance, it's been quite a journey for this streaming and movie production giant. Netflix went public on May 23, 2002 with an initial share price of $15. It has since had 2 stock splits, with the last one in 2015. Looking at the split adjusted stock price, Netflix climbed a massive 67,000% from its IPO price of $1 to its all-time high of $700 in November 2021. That's the kind of growth that turns modest investments into fortunes. However, the road hasn't always been smooth. Netflix stock tumbled 77% from its all-time high to the 2022 low at $163 as subscriber growth stalled. That year, it reported 2 straight quarters of subscriber declines. But the rebound from the 2022 low has been equally impressive, with a 315% increase back to retest the all-time high of 2021, thanks to the addition of a lower-priced, advertising-supported service, as well as a crackdown on unpaid account sharing. So, when is the right time to buy Netflix? If Netflix can find the momentum to break through the current all-time high and confirm the next leg up, this will offer buying opportunities with the stock likely to target $1,000 per share. And if stocks like Nvidia can move through $1,000 per share and prompt a 10-to-1 stock split, then there is nothing stopping Netflix from doing the same. Put your opinion aside, let the stock dictate, and follow along. It's simpler and more profitable. The financial sector has been setting record highs with a climb of over 8% since June. Watch this video where I cover 5 top performing financial stocks that you would want to add to your portfolio if you're looking for exponential growth.